everyone, and welcome. My name is Jason Spitz. I'm a senior journalist at SMS Trustee News, and today I'm joined by Sam Phillips, Chief Executive Officer at Reach Alternative Investments, and we're talking about private equity. Sam, I wanted to start out by asking a question. If you could describe what is private equity, just describe that simply.
Yeah, sure, Jason. Look, private equity is an investment that somebody enters into where a fund manager uses the investor's money to purchase assets, and those assets might be, anything from a venture capital, a startup company, right through to real assets such as real estate. And the difference between private equity transaction and a listed transaction, which we're all aware of, which is, the stock market, is that they are long tenured investments, anywhere from 2 to 10 years. And the investor is giving money to a fund manager. The fund manager invests that money on your behalf, actually buying the assets, and you participate in the upside or the downside of that investment. However, I would point out that we are not going to retail market. Our space is sophisticated or wholesale investors in Australia, and that's anyone above retail right through to below institutions. So it would include family offices, and we also work with advisor networks to ensure that they're part of the process.
When you're talking about sophisticated investors, that's about $75,000 or more in terms of accessing the Reach products. Is that correct?
So $75,000 is the minimum investment to come in. We do need to verify that our clients are sophisticated, and that requires an accounting certificate. And the reason we're doing that is because when we look at people that we want to come on the journey with us, our community of investors, for a 10-year investment, we think it's important that it is the right investment for you, that you do have the ability to hold on to an investment for that type of time frame.
Now, one of the things that you mentioned is that Reach offers access to institutional grade private equity funds. Now, there's a couple of things that I want to break down. One of them is institutional grade, and the other one is private equity funds. So can you just talk us through your process? Because one of the things I'm aware of is that you fractionalize things as well.
So I think just to sort of explain what we mean by institutional grade, private equity, there are ways to invest in private equity with $500, for example. You can go to a crowdfunding site and invest in a microbrewer who might be trying to raise $500,000. And they will aggregate demand from a lot of people to raise that money. That is a form of private equity. That's not where we are. We're looking for the more conservative investor, which is why it's self-managed super funds and retirement portfolios are very well suited, in our opinion. So institutional private equity would normally require a minimum ticket of, say, $10 or $20 million. The typical investor in these funds would be an endowment fund or an insurance company who may be writing a check for $10 million up to $200 or $300 million. So they've been out of reach of the non-institutional investors. And the differentiator is that we want to bring these products to market in the format that has always worked. But private equity, if we try to make it non-institutional in format, has shown historically to not perform as well. If you have an investment which is all about trying to get long-term capital appreciation over, say, a period of 10 times, if you make that very liquid, you then bring the volatility that we're all seeing in listed markets, in the stock market in. The reason that the institutional works is because it is illiquid. It is only there for people who want to look at how the performance is going maybe every 3 to 6 months. And the asset manager can just get on with building the long-term capital appreciation without having to keep the market happy every week or month like a listed stock does. The minimum investment size for these is normally, say, $10 million US or upwards. What we're doing is we're building a community of investors. The investors can come to us. We aggregate the demand from our community, and that might be 150 or 200 investors that we bring together to bring the minimum check of $10 million or more. We then face the asset manager as the single institutional investor, or what's called an LP, and we handle the entire process of reporting, taxation, communications on behalf of our community investors. So it's not crowdfunding, but it is the aggregation of our community which is making it possible.
Before you mentioned that, because it's a long tenured type of investment approach, it's not really designed for people who are checking the markets every day. So I'm curious as to how that then would sort of fit into an SMSF. I've seen some reports that some larger superannuation funds in Australia are already looking at private equity. So I'm wondering how it sort of fits, private equity fits into an SMSF.
I think the reason that we're getting a lot of attention from the SMSF community and to the advisors that are working with them is that when you're investing in the stock market, you have a lot of daily volatility. What this brings is the risk of emotional investing, which we all feel that we're not going to succumb to, but unfortunately, a lot of us do. When times get tough, a lot of people move at maybe the wrong time in the market due to emotions. So the reason we feel this works well is if, as an example, if you're a 40-year-old with your own SMSF, you have another 15 to 20 years before you can extract that money out of the SMSF. A 10-year investment, as a small portion of your portfolio, we are not suggesting that anyone should put all of their portfolio into these type of investments. People say, and the advisors we speak to say between 10 and 20% makes a lot of sense. It helps to dampen the daily volatility, but it also allows the potential for some outperformance. And private equity there's a wide spectrum. Obviously, you've got venture capital right through to real assets like the US private equity real estate fund we mentioned, and they all target different returns.
It sounds very interesting. If people wanted to have a look at Reach, what's the best way to find you guys?
We're on the web, so it's reachalts.com.au. We sort of explain what we're doing there. We love a chat, so if anyone wants to jump on, there's a contact us page there. We're always happy to have a talk, or give us a call, send us an email. My email is sam@reachalts.com.au, and we're very happy to talk to both advisors and individual investors.
So thanks so much for your time. Really appreciate it.
Great. Thanks, Jason.